Bank of Canada releasing its business outlook survey earlier this morning, showing that sentiment is one of the highest readings that we have ever seen. Investment intentions, in fact, are at a record high. Intentions to increase hiring or increase the employment base back to pre-pandemic levels. However, this survey was taken before the third wave of the COVID-19 pandemic really took hold of the Canadian economy. Let's bring in Josh Knives, a senior economist at RBC, for insight. Josh, thank you so much for being with us. Is that the fact that, this survey was taken at a time where we were in a lull between the second wave ending and the third wave beginning, kind of a giant asterisk on the positive momentum we're seeing in these businesses?
I would say yes and no. I mean, certainly for some of these hard-hit services sectors, the outlook has deteriorated since early March when this survey closed. So, we should see a pullback in sentiment. But I think if you look more broadly at the improvement in sentiment and demand and hiring intentions and investment intentions that you noted off the top there, we're seeing that in a lot of industries that were resilient through the second wave of COVID-19. And I think this survey raises optimism that resilience will continue through the third wave, and that we're gearing up for a pretty strong economic recovery over the second half of this year when these containment measures can be eased on a more sustained basis.
Yeah, I wanted to underline that point because the Bank of Canada Business Outlook survey specifically mentioned that about half of businesses felt like the second wave had little or almost no adverse impact to them if, let's say they're not specifically affected by any restrictions or lockdowns. Why do you think that is? Have we just kind of gotten better at adjusting to these rolling shutdowns? Work from home is now kind of more firmly entrenched, and so you're not seeing that disruption in productivity?
Yeah, the Business Outlook survey did mention those types of adaptations that businesses and households have made that mean the economy is less sensitive to the lockdowns that we saw in the second wave and that we're seeing now in the third wave. This supports the economic data that we've seen over the past several months. Stackhand's latest GDP the economy continued to grow in January and February, making for 10 straight months of economic gains. These indicators have suggested a good deal of resilience outside of these hard-hit services sectors. And even in those sectors, if you look at the jobs numbers that we saw last Friday, we saw a good deal of rehiring really been impacted by restrictions. They'll probably give back some of those job gains in April now that restrictions are tightening once again. But I do think that this speaks to the pace of recovery that we're likely to see once vaccination is more widespread and the economy can reopen on a more sustained basis.
So with that recovery and even those more vulnerable sectors, does that, you put that all together with the data that the survey is telling us, does that basically give the Bank of Canada the full-on green light to begin tapering its bond purchase program when it releases its decision next week?
Yeah, we do expect that the Bank of Canada will announce a taper of their QE program next Wednesday from $4 billion a week in current purchases to about $3 billion a week. I think one of the more interesting things will be whether they also bring forward that timing of the economy. And you'll recall that's a sort of key indicator for when they might begin raising interest rates. Our forecasts, we've upgraded them pretty significantly over the past several months. The Bank of Canada is going to be updating their forecast next week. We think they'll, like us, show significantly stronger growth in 2021. We think that's going to mean the economy returning to full capacity by the middle of next year. And, that in our forecast, raising interest rates in the second half of 2022 rather than in 2023, as their guidance currently suggests.
Let's talk inflation, because that was also a question that the Bank of Canada put to the businesses that were surveyed. And you saw a greater rate of companies expecting to increase their prices than we had seen going back to 2000. Did that surprise you, or is that in line with what you're looking for?
Certainly the increase in input that businesses were flagging is not surprising. We've seen higher energy prices, seen some supply chain disruptions that might be adding to price pressure as well. So not surprising to see higher input costs. This survey indicated, some businesses are going to be trying to pass on those costs to their customers. But generally speaking, the survey here indicated that those output price increases will be relatively modest. And if you look at businesses' expectations for CPI inflation, actual consumer prices, they're still contained, as 1 to 3% target band. So I don't think the Bank of Canada will be too concerned about the reports of some increases in price pressure in today's Business Outlook survey.